So the gold market, this has been just amazing to watch, and our analysis on this has been just stupendously great. And I don't mind saying that because, you know, I say it when I miss it and I say it when I get it. And this peak in here that you see is coming a little bit later than we would expect it. This is a right-hand translation. It's a swamped cycle. In other words, it just kept rallying, and now when it gets to the end of it, it moves down sharply. This is somewhat typical when you stretch a cycle. Think about that for the S&P 500, which has a stretch cycle also right now. And generally what happens is you get a couple of bars, 2-3 bars that are sharp on the downside. You can see in here the upside buy momentum right in their confirmation. Actually, we have a buy pending coming in right over here, so I'll have to stretch that over when I redo the charts this weekend. And our target right now is 2017 down to 1973, and we consider this to be a buy zone in there. We don't expect it to be able to get below there. This is a bit of a shakeout after that upward panic to 2089. These were the minor cycle fib confluences right in here, which if you take the cycle projections, the fib projections off of this cycle and this cycle, they give you these right over here, and that's where it's stalling. We're always looking for ways to get the best information. So we're getting this pullback right now. We think it's a buy, and that it's likely going to get some footing in here, and then this rising phase is what we're looking at right in here. Now I want you to note the dashed line in here, that's silver. And the silver and gold corrective periods are out here in late August. That says that this rally coming up right in here is likely to fail and move down. So our 3-week projection is making a little bit of a bottom in here and then getting another rally up to this level close to 2100, just a little above or below, and then a maybe deeper correction right over here, and maybe that's a shakeout to set up another rally where these cycles then turn to the upside right there. So that's the look in here. We'll look over the next 3 weeks for or maybe come down early into next week, and then another rally setting up, and then a bigger correction right there. Pretty much we see this chop between 1970 and 2100 as a pretty strong likelihood looking at that. Some of the evidence formations are still very good, very bullish, minor corrections, and those corrections likely to come at the time when the dollar is correcting to the upside. A very strong day for the dollar today, and then overall I don't think anything severe in here on the downside, because the government is just going to do whatever they can, print whatever they can, create whatever money they need to try to hold it together. That's the Fed. I actually don't think that the government is going to be able to do much more on the fiscal side, as I mentioned early in the show. So that is a look at the gold market.